show you a bit of a fair trading strategy in action that is timeless. It's a great strategy for beginners to start with and develop. Because this benefit trading strategy works in every single market, and also with experience in the right situation, you can really scale up those profits when you're using it. I'm sharing a screen here and I want to get straight into it, showing you how and why it works. But to give you a quick heads up, there's 3 screen recording examples rolled into one in this video. You're watching now. I've recorded the first 3 races of the day back to back in order to show you how this works over and over again. The results vary between the 3 races, although we'll be making the best part £100 profit in a little under 30 minutes. I'll explain what I'm thinking and what I'm doing as we go. So looking at the first rate of the day on that, if I know that you think of interest straight lost by the way and react better exchange markets in real time. So starting for that first race, then I'm going to take through the sequence that ultimately goes through per race with my thoughts. Now I'm looking at time forming the background here. Just have a little look at this race to see if there's any standout differences or irregularities. What I'm not doing is reading the form. Okay, I'm not trying to reform predict where the price is going to go. I'm just looking at it. There's a horse that's on its debut that hasn't run for a long time. And then if I spot large amounts of money in the marketplace in line with that, then I know there is something that could be unfolding. Next, I'll take a look at the different runners in the race. As you can see, I'm doing top right there, just so I can have a look at their charts along the bottom, the traded volumes along the right, and the current prices are up. Just as again, see if there's any standing out differences, any sort of nasty that you might not see if you haven't looked at this before, whereby a horse is being backed heavily or is going a horrendous drift. Now, next thing from there is to take a look at the market over. You take a look at the ladders, see the relationship between the different runners and the historical price activity. Because recent volume changes and are likely to have a big impact on what happens in this live show in a few minutes' time when you see the trades unfold. The overrun in the marketplace actually ensures that all prices are relative to each other. So some may be aware of this, but basically if one goes down, something else has to go up. Although there is a bias towards the front end of the book, now I'm looking at one of the outside runners there on the 4th flat over to time for just to check a little bit more there again. But what I'm trying to find here is there's something that's going to push down heavily in one direction, and that's being backed. That's happening now. Does not necessarily happen throughout the day. That's happened now or gonna likely to unfold more so now, because that will affect other runners within the marketplace. So I'm building up a bit of an overall view, an image on what's actually happening in front of us here on the screen. So comparing the runners, and I'm not predicting, that's what I really want to get stuck in here. Because a lot of people think you predict the price because you read the form or something like that. We're not predicting the price. It's quite early on, highlighting the time over the left there. We are just looking for changes, and then we're going to be reactional to those changes as they unfold, which is where the strategy comes in, which we'll talk about more in just a second. So we're looking to profit no matter what happens here on this race, because it starts, we're going to lock in a profit with the prices moving, or that's what we aim to do anyway. So we get in the current idea, we're getting up to speed, we've built up our image, and now it's a case of keeping on what's happening in the market activity. You just place the lay bet there on favorite, because it looks like the favorite's drifting out here. I was thinking you can get back for a very small amount. See, it takes a few ticks early doors because it seems quite obvious to me. Right now, the second, third, fourth runners are all coming in and favorite this week. So there's 3 versus 1, which means, is there a 50-50 decision? Because when you trade in a price, it can only go 2 ways. It can go up or it can go down. We can go down. It's not 50-50 decision all the time, which is where trading comes in. But there is a 50-50 on the outcomes. So we're looking for a situation where it's more likely to move in one direction, when really it can only move one of 2 directions. So the strategy is to find the bias in the money. in the marketplace as it happens, and then exploit that as it's moving, as it's happening. And while it's happening, rather than trying to get a crystal ball and do the mystic making, predicting the future, so longer term view is what we're looking at here, because there's a lot of market noise, which we talk about a bit more in a second. But when the market activity picks up, because it's very early on the right now, 6 minutes, full stop, and there's more money matched, there will be more market noise. There will be prices bouncing around very short term. But what we're looking for is a slightly longer term action there, and the reason for it, and finding that the bias, so looking at the top, is £52,000 matched on this horse race. It's a 2-month novice flat race, which means there's a low amount of form. Therefore, the prices are probably more likely to move, because the marketplace is made up of an opinion on a race where there's very little form of people that don't know a lot about the runners. One other thing that I failed to mention previously, so do cross-check occasionally towards checker and color of different sites. It doesn't matter too much. Typically, bookmaker prices follow the exchange prices. But again, just looking at the terms, if you weren't aware, if you like the lanes, but you can start to see the overall pay, their price activity, looking for that bias that's likely to unfold in the live show in the next few minutes. So if I speed up this recording just now, bring you to where the action is, I'll explain what's going on and why. So I'm interested in the second runner here more than anything else in the race, and bearing in mind the relationship between the others that you can see the market overview on the side there. But the second favorite boot and shoe here appears to be the money horses. I call it the horse that's attracting a little bit of support inside the live shows. We're coming to the interesting end of the market, now the last 3.5 minutes, but one thing I want you guys to remember here is a lot of the work is actually done before this point. So I've already built up my opinion, and it's a case of sitting and watching, being disciplined, understanding what's likely to happen, and then remaining flexible, in my view, and how I approach and deal with this race, because things do change. So I placed a couple of lay bets in the market there on these two runners. I'm not 100% sure which one's going to come back in there. I'm thinking potentially the favorite could turn on its price here. It may continue. The second favorite is more interesting out of the two, but placing those lay bets in the market away from the active price, which is the price where the touch prices, where those two prices meet up in the middle there, because if the price starts to come towards us, I'll already be in a favorable position at the bottom of the queue with my lay bets in the marketplace already. So as this picks up, and as this comes into the live TV, you may have just heard that in the background. Just there, they're just starting to cover the race. Horses aren't actually down at the start on the screen live right now, but once we get to that point, that's where we're going to see the liquidity and the full rate in the market pick up significantly. Now, this is quite the time of the year, also like a quieter time. So if you can do this on these races, then you'll find it a lot easier later on in the year. During the flat season, you'll see that I'm just started to open a position there, back in boot and shoe. Because you see around about this time, I clicked that if you go back and look at the recording, is where there's a flurry of money that comes to the marketplace. It was confirming what I had already believed. We're in the active window where there's more liquidity, there's more at stake, and there will be more pressure in the marketplace. Although there's a low amount of money on the backside of the book. This set in the marketplace, we have got money to get out against for the size of stake that I'm on. I don't want to be too overexposed, but we're in the window where there is a significant amount of money that comes into the marketplace. If you're trying to do this sort of 20 minutes before the start, you're leaving yourself in an exposed position when it comes to risk, because there's not that active fill rate in the marketplace, which can actually match your orders and allow you to get out the position, whether it's a win or a lose, so that's one thing to bear in mind. Also there, now I've noticed over in the fourth runner over there, which is so maybe a little bit sketch on this, the fourth runner on the right of the ladders there is also attracting significant money. Now in an ideal world, that wouldn't be happening. So all of the action would be on the runner. That I'm looking to trade here. So it's going to scale out a little bit of my position there. 50 critics on for 200, and this is a low liquidity market, and it isn't going crazy right now, but I still believe at this point in time I've not completely bailed on my view or understanding what's happening because I'm not looking super short term and looking at that noise as I previously mentioned. I'm looking at the sort of more medium term, slightly longer term, the next minute or so as things cut proper on the TV and there's more liquidity in the marketplace. You'll see. I'm looking for a little bit more of a move. I believe that this could come down to sort of 4.0 and below. I think it's quite likely they will give the fact that this horse attracted more money in the marketplace than the others. The only one that's slightly unnerving me at the moment right now, looking at the screens, is one over there on the fourth ladder, and also I'm keeping an eye on the favorite. The whole time too, because the favorite is the shortest price in the marketplace, and the short of the prices are the more influence they have over the entire market because they hold the largest percentage of the book. Now, if this doesn't get moving in a second and that liquidity really arrived proper and TV is now coming on, we're looking in a better position now. But if that doesn't arrive proper, then I'll be looking to get out of this position of filter out pretty soon because we're past post time. But this race is certainly not going to go off on time, and horses sort of like loitering down at the start, but they're not actually ready yet. So this is where is the make or break situation. May have to close out for a sort of liquid loss at this point in time if things don't pick up. But I'm really not too worried about that unmatched money on that lay side of the book. That's something that I think a lot of new time traders are beginning to get a little bit unnerved about this season. It's 1,500. How's that going to possibly ever get through it? And it doesn't really mean a lot because once the price starts to move, those numbers, they're not totally irrelevant. But it's less important. So there we go. We've got the top haul and the momentum is coming to the marketplace and it is close to the start. So I've not really been left much time to let this move and develop. So I've just closed that straight away. It was unnerving me, and again I can see over on the fourth ladder still there's a little bit of money for that horse. It's obviously a bit of interest for that horse too. I'm not going to try and say its name, but the horse I'm really not too bothered about in the situation was the third that was the least interesting out of the lot. And also, you say I've highlighted on the market overview there, you can see that outside the grey line it's coming, also just flickering through the different runs there because the race is about to go off. So the first race there, 26 quid, wasn't the best example in the world played it, but about right now the price. So the price is coming into 11 to 2. It's coming away down to 3.75. Now, so it was right all along, but we did need to remain confident in what I was doing. The screen, bearing in mind this is a 50-50 decision. It's certainly not a 50-50 decision, and they're not leave themselves massively overexposed. So there you go, the race has gone off in play, and then if we head over to the Betterfair website, just to show the trader bets on this runner and to see the difference between the two prices there. As you can see, difference between the back and the lay, once that refreshes there, and that's how we're ended up with a profit over on the left-hand side of the screen. So if you move on to the second example, now I'm going to save you the spiel that we went through on the previous one. You can see what I'm doing here. I'm doing the same routine, same systematic approach, looking at the race, seeing what's going on. And so the recording plays at double speed here. We're going to just fast forward through to the most interesting part of the race where the action is. What actually is going on, so whilst this is playing at double speed, if you bear in mind, take a look at those dark green bars on the traded volume on the right hand side of each column, because it shows us where the resound is at this point in time. Again, it looks like the favorite is quite weighted. It looks like the second is also a little money, maybe the third, but nothing really too notable. However, this is a short price. This is a weak short price. Is a free novice handicap chase Exeter, and therefore cut the back positions further up the ladder and thinking potential. This is a 2v1 situation again, so it's a 50-50. This is going to drift. I don't believe so in this instance, so that's why with slow recording down, now I've just had a layback match at 2 points, and you'll see that they are very small stakes because this is slightly earlier than I like to get involved in the market. Now, the reason it's slightly earlier is since what I said in the last video, it's not being covered on TV properly yet. There's not lots of action, and so we haven't got the full on fill rate, the difference between on the slightly shorter prices. You can use slightly larger stakes more comfortably because there are always larger amounts of money being matched in the marketplace. So it looks like on first glance that third, and highlighting with the cursor, you can see the thirds taking a little bit more money, which is providing a little bit more imbalance in the marketplace. So we're looking for the drift and the favorite. Although I'm looking back on this, I'm thinking at the time, I was thinking it as well. This is not really took off at the speed I'd like to have seen it take off. There's not any other standout indicators or massive influences outside like to do with the race, or maybe this hold doesn't run on anything like that. That makes me think that this would go adrift. I'm purely trading the numbers. I'm looking for more bias in the price movement than 50-50, really, and then just playing it as we go there without overexposing myself on stakes. So these are low stakes, nothing to get excited about. I like to work into the market sometimes like this, and you'll see on those markets where the price starts to really move. And these large volumes come, you gain more and more confidence, and that's where the stakes increase to, you start punting 235 or 500,000 pounds at a time. Now, price hasn't really taken off. I like to say a bit more money for the third. Again, it's early, and that's why I'm kind of playing this. I'm almost like, dare I say it, I always say don't do those maybe trades, because a maybe you shouldn't really be doing it. But this is more towards the end of the spectrum where I don't have hugely strong opinions. I just think that it's likely that there's going to be a little bit of movement, some playing around. Now, I realized that obviously whilst I was trading the screen and so having the same thought process over again, and so I've closed out the position, so at 42p green, and couldn't care less whether it's a green or red at this point in time, because I'm not getting involved on a significant stake until I'm confident, which is sometimes really worth highlighting, because a lot of new traders in particular, and all traders of all levels, do this too. Need to realize and recognize that it's not just what you do in the market all the time, it's what you don't do. So what I'm not doing is getting myself in a precarious position here by feeling the urge to place bets and get them matched and be doing something because we're only 2 minutes from the start, which can be late. But the interesting thing here really is the fact that although there's a little bit of money coming in for the favorite right now, the market is actually interesting in it. So it's not changed significantly in direction. So I'm wondering right now, is this going to be a case that the market is going to bounce back? The true direction might be the drift and the favorite. Bounce back. The true direction might be the drift and the favorite. And therefore something else is going to come in. You see a little bit of flurry of money on the second favorite there, keeping on the fourth too. But if the favorite should be ping back out and go a significant drift, it means something else. It's going to open up the floodgates or something else to come in and sort of quite quick succession. So I'm trying to work out which runner is that going to be of at this point in time. That's the kind of thought process I'm going through in my head. In reality, I don't really know, because it's a little bit of a flat market. There's not a distinct bias with one particular runner, where the price is almost certainly going to move in that direction that we want to see. So again, the favorite is being resisted. It's all hinting around a favorite because the favorite is the short price, which has the most control over the marketplace. I'm thinking the second could be the one that pings in as the favorite goes out. Now I'm kind of preempting that and anticipating that, but it's not really happening on the favorite at this point in time. So I'm being very flexible in the way I'm viewing the market right now. I'm even now replaying this and looking at it, I'm thinking probably should be back in the favorite, which is what I'm doing right now over there. That is because the market in it can only sustain resistance for so long. After a while, resistance becomes support. And if it breaks through that resisting point, which is what it was struggling at there, then it becomes supporting, which is what we're seeing now. And we're seeing the shortening of the favorite there, but we're really close to the start of the race. It's all happened a little bit too late. It wasn't very clear. It wasn't that obvious that bias was going to take place, and therefore it should be the one that we're exploited. I've closed out for 3.76 there. It could have been better. Certainly, I don't think I played this market badly. It was just a little bit of a frustrated market, which happens day in and day out. Believe it or not, And taking 23 quid sometimes is something that you just have to do. So if we move on to the third and final race, this one's a bit more interesting, a little bit clearer, a bit of a better example for people that are looking to use this bet for trading strategy. So the third race is a Newcastle race, and the third race of the day, you can see we're 8 minutes from the start. Markets not active at all at this point in time. A little bit more money matched on this one, slightly more interesting 2-mile novice race. So looking at the better charts along the bottom, because they're always good to sort of weigh up against each other, although you do need to bear in mind that there is no timestamps on the better chart, so it can provide some slightly warped information. Got separate video of the channel put in the end screen about that if you want to see that, but I'm comparing them against each other at this point in time. Again, I'm trying to work out where is the money coming now, where is the money being, where is the bias, what is overpriced, underpriced, and where are we going to get more than a 50-50 outcome. On a positive, we take. Seeing the dark volume bars, you can see money coming into the market. Recently got that step on geeks with the last 40 seconds or so. At this point in time, I'm just trying to get a bit of a feel for what's going on. Now, we'll fast forward the recording a little bit once more up until the slightly more interesting stuff. But you can see while we're fast forwarding this here, the significant money, or the sustained money if you like, has been on this North Parade and favorite there. There's been quite continuous throughout the last minute or two, and as we lead into the last or 4.5 minutes where the market gets a little bit more tasty, we get the action on the TV. I've got the live video on my separate screen. By the way, for anyone who's wondering their money in that same time, because although people like to get arbitrary figures, when will the market pick up, I can't turn around and say to you 4 minutes every single time, because it varies. The TV channels vary, when the adverts are on vary, who's different coverage of different interests, there's always changes. So you need to be flexible, malleable with that too, and which is probably a large part of the problem for people that are trying to trade successfully a lot of the time. Because a lot of different things are kind of moving, but more money coming in for the favorite there. So this is looking relatively significant. Also the third, you can see that there's a little bit of a flurry there. In fact, the third is looking a little bit more tasty given its price. Now the reason I want to say that this price is up here at 6.2, we see a little bit of money for that. Previously, the only one that's really pushing against that and the alternate direction is the favorite. Now the favorite is coming down to 4.0, which is a crossover in the prices, which adds additional resistance for the price contracting. So I'm looking for, again, a little bit similar to that previous race, a bit of a pivot situation where the favorite bounces back out. This third favorite is now in the second ladder, is being supported. Then we can sort of take that fork from the ride, that little bit of momentum, where obviously it is certainly not a 50-50 situation. So having had a look at the old checker prices as well, this third favorite has already had some previous interests throughout the day. So it's an interesting situation here, even though that's maybe not depicted very well on the better chart on the bottom there. But this horse appears to be interesting, which is my way, if you want to call it, if that's how it's pronounced. I'm terrible pronouncing horse names. You see over on the left there on the market overview, that is quite clear. To the blue line is the horse that I've got an open position on here. So I'm taking a slightly longer term view, so more of a medium to slightly longer term view on this at this point in time. And it's all about sort of, I feel quite confident looking at this, having seen all the different factors on the build-up, which is where most of the work is done. But if this bounces against us, then I can close out quite quickly on a 150 state. There is just a double click and the activity is picking up. So one thing that I really want to highlight also is a lot of the actual movement, proper movement, is sustained. And more, I don't want to use the word predictable, more obvious that unfolds, it usually in the last few minutes. Okay, sometimes it can be the last minute, which seems really counterintuitive to anyone who's trying to make money from trading, because they used to have an hourly rate and all that kind of stuff. But it's more like you sit and watch for a few minutes and then you make all of your money in the space of 2 minutes most of the time. And so just bear that in mind. But the price is ticking down in our favor. Sorry, just have a quick look at the time form cards there again, see if there's anything I missed, and it's always a case of what have I missed, what's changing, what is likely to affect this price movement, but the price is starting to go in our direction. So I'm not going to close out the position. As the saying goes, you got to let your profits run and you got to close out your losses that bit quicker. We now in the period where there's a better flow of money in the marketplace, it's more money ticking up, it's easier to get out of our position, be a win or a loss. So I'm going to use that to my benefit. What I'm not going to do is panic and go on in green and take the money straight away, which I think is probably something that a lot of people do, particularly when they're new. But at this point in time, I'm constantly asking myself the same question with this better trading strategy. It is a 50-50 decision. The price goes up and down right now. Or is it more favorable in one direction than the other? Now I've got a late position in the queue. I think it's a good chance that I will get matched the next minute or so. Hopefully we'll get a price even shorter, and this will be a more predictable situation whereby it was predictable in the sense that money was flowing into the markets. I was already riding the wave that was already happening, is what I'm trying to say. Rather than taking a punt on, I think this haul is going to shorten because it ran last time or whatever. So here's the interesting thing that I'm probably not talking about enough right now, is the money falling into the market. Look at the active money falling into the market. No fancy gizmos or things required or deep form reading or secrets, right? It's just plain old fashioned money falling into the market. You can see money is falling on the back side. The back money is taking, the lay money is driving the price down, and that was happening on a lower scale earlier on. But now we're into the business end of the race. It's actually happening continuously and with larger stakes. So I'm full of confidence at this point in time. It's only the fact that the race is due to go, checking out that bit in position to lock in the profit, and you're doing so with an edge of advantage within the market. It may sound very simple on the top level, and in many ways it is, but it's a little bit more tricky to execute in the markets. If you've already tried, it's highly likely that you understand where I'm coming from with that one. So in this video, it can be more practical. I'm going to tell you some practical ways with reasons backing them up, including some graphs and strategy and data and information, meaning it's possible for anyone to do. I also advise getting some trading software right for all your trading, just because it gives you more information, quicker information. It's more useful for making informed decisions, as you say, like in the video. On top of that, you want some live streaming of some sort of the match, exactly how that works too. So starting off with this strategy, one is very a low risk strategy, and this little, sometimes there's no risk involved in doing this, although I'm not going to kid you, you can't necessarily do it in every single football match, but I'm here to tell you that the truth and actually help you rather than get you to mindlessly place bets. So the reason the strategy works is because it's focusing on an imbalance in probabilities, meaning you're more often likely to get a bigger upside than you are downside. Therefore, it will put you in the green long term. Player psychology on pitch is very important, key element to the strategy, as is overreactive behavior in terms of feeling like they've missed out potentially, is going to move the market in our favor. And again, those losers and their panic in chasing their losses, maybe cashing out profits really quickly after the goal, and they're all going to work for us in our favor to give us an advantage in the market. So the way to make the best of this strategy in terms of winning is to make sure you come in with an opportune entry position. Entry bet to the opening bet in your strategy, offering value at price for yourself, not for everybody else. So you're offering a poor value for everyone else, and it also exploits a natural stalling point within the market. So it's low risk. We're looking after the losses and then waiting for the upturn whilst everyone else is in turmoil. Quite frankly, we're going to take advantage of that. So if we look at this chart, you can see in the chart on Bet as Exchange for a football match, there has been 2 goals in this match, very notably on screen there, and this is where the price has dropped. Now, when the price drops, you can see that there is this routine pattern of behavior in an overreaction that goes all the way down, where I have highlighted it on the screen with a green dotted line. So you want to place your opening bet. So the opening part of the strategy is to place a lay bet at the bottom price there or around about there. You don't have to get the exact price. And you're offering a bet to the market. So the market overreacts. Sometimes it can go on for sort of like 20 or 30 seconds while the market sorts itself out, bouncing around. Typically it's not for too long, but like I say, we make money, not sort of spin you some debt. The market then corrects itself and goes back to where the yellow line is dotted across the screen there, which will put in profit to start. Looking at this example, that gives you around about 66 profit that you could cash out for. But the most important point is the lull in play. So after there's a goal gone in, there's often a counter from the opposing team which can then push the price far further up. It's quite unlikely. It does happen occasionally, but it's quite unlikely there's 2 goals in quick succession. And that comes down to play psychology on the pitch too. They've just scored a goal, is their main priorities, then try and whacking another one within a space of a few minutes. So you're left with a position where potentially there's a massive upside, because if the the counter in team score, the price goes back out to 1.7, you're in for a huge profit. Where is the team that just scored a far less likely to have another goal in quick succession? It's almost like creating yourself a free bet game before the football, and this strategy is based around time decay. Probably have a few differences to what you've heard elsewhere. So the reason it works is because chance deteriorates over time, as you can see on the chart on the right there. And so there is a movement in the market in one direction. We know which direction the market should be moving in, which is a benefit to some degree, and we want to exploit price movement as it happens, knowing that it goes in at one direction. The other reason that the strategy works relatively well is because you can tie this in with player intent and motivation in terms of what's happening on pitch with your own football knowledge. Remember, trading or betting should always be viewed like a boxing match where you can choose to step into the ring and take a punch. You don't have to be in the game all the time is what I'm saying. So with this strategy, particularly be very careful when you do and don't use it. The whole advantage is to step back, keep minimum exposure in the market at any one time, looking for that area of maximum movement in line with time decay. So the best way of winning with the strategy is to target areas of accelerated decay. We're going to highlight that and go through that in a moment in more depth. Focus on keeping that minimum exposure, as I say, in terms of potential loss, manage the downside and offer entry bets only at value prices. Again, much like the previous strategy, and seek extreme domination on the pitch, basically. So you want to look at the things like expected goals, shots off target, shots on target, teams keeping the ball into the corners later in the match, because quite frankly, domination is what the strategy is all about. If there's domination on pitch, then it's a safer environment to use the strategy. We don't want it to be competitive. Competition is for losers in terms of betting. Quite frankly, it's a fair statement. If we look at this chart here, I'll explain what these lines on the chart are all about. You've got the football match from the start there. You can see the traded volume down the bottom, very small portion where there's a large chunk of volume and matched. That is pretty much, the match is then started. Throughout the match, it's going to move about midway. You can see there's a large spike in volume and price activity is stalled. Now, the reason the price activity is stalled half the time, there is no match going on, nothing is happening, and so the price was flatlining more or less. Now, the second half is where you see the time decay accelerate. So that's what I've highlighted on the chart here. So we've got the dark black line at the bottom and the dark black line at the top. That is the area where there was the most movement in this particular match in the shortest space of time, highlighted by the light grey lines. Now, the Betfair chart, something to bear in mind, you should probably should bear that in mind with the previous chart also, or not in relation to time. So that first chunk on the left, dead on the bottom with this large volume match. Pretty much that could have been 2 days. Whereas the small chunk that I'm highlighting there was more like 5 minutes. So in the space of 5 minutes, we've gone from a price movement of about 2.6 0.08, 2.1, all the way up to 2.3, slightly above that, 2.32. But all of that happened in a space of a few minutes in the game in the second half because time decay was accelerating the price. Now, the strategy is built around what's actually happening in the match. So you must have seen it in the past. Players start playing the ball into the corner. They know the score line. They're looking for points. From the match in the various league tables, they play in the strategic game. So what you're looking for is when the ball's out of play, not a lot going on. There's no motivation. There's no intent. The ball being held back in certain areas, and there's quite frankly not likely to be a goal. And then you quickly nip in and out of the market, minimum exposure, the maximum return when time decay is moving, a fair speed. Like I say, strategy you can use in the many different matches, would just be very careful that you don't use it in the wrong environment, because that's when a goal will go against you. And I don't want to happen, because that means you're having to do several other matches to bring your profit back on par. Strategy free, and probably my favorite strategy, is around